We have got to take a look at the markets to see what we're being set up for as Jerome Powell speaks at the Jackson Hole Symposium on Friday at 10:05 a.m. I am Dr. Stock, Doctor of Education, and seagulls don't fly over the bay because then they would be bagels. Last year, during the Jackson Hole Symposium, Jerome Powell came out and we thought that we were pretty good and probably going to slow down rate hikes a little bit, and nah. Instead, he came out and said that he was going to just absolutely punch inflation in the face by increasing the federal funds rate and really put pressure on the demand side of things. And markets did not take well to that. Markets took from nearly the end of August until the middle of October to bottom out following that speech. And so that's something that can really rattle the markets. And I'll tell you what, the name of the game this time is volatility, that I think that we could expect to see tomorrow into Friday. Jerome Powell comes out and speak at 10:05 a.m. So, I mean, why 10:05 and not 10? I don't really know for certain. All I can tell you is that that's the time that it is. I do want to look at the economic calendar on this, and I also want to go ahead and look at the markets and give a little bit of technical analysis and a little bit of commentary on what I think that we can expect to see coming up in the market over the next few days. On this channel, it's all about value and service, and part of that value is this offer for Moomoo, where you can get up to 16 free stocks, and even more so is my Patreon exclusive content and my Discord community, which I'm in every day throughout the trading day, that you guys can come on over and talk with me and my other community members. We'd absolutely love to have you over there. It's been incredible. And I'll tell you, as we go and look at the markets here, that this little bounce that we've taken was something that I thought would happen for us. I talked about it on Friday, and I'll tell you what, through the options plays that we made, through the different stocks that my community members have taken advantage of during that time, it's been a really exciting time. Yesterday, during that little bit of a dip, it was like, ooh, well, let's see what happens. Then today came back and did not disappoint. So that was absolutely incredible. A quick view at the economic calendar. By the way, not that this is about mortgage rates, but oh my gosh, look at the 30-year mortgage rate that we have here on Trading Economics. The actual that came out today, 7.31. And all I got to say is that that's gross. I do not want to borrow money for a mortgage at that rate. I am more than good waiting for the rate cuts, and I think that's a really good market sentiment for at least slowing down the housing market a little bit. I don't know if it brings the affordability back, but waiting for federal funds rate to be cut could be where we start to see that next resurgence coming up. So as soon as that gets predicted, I think we see it as soon as December and as late as January. And I'll readjust my position as time goes on and see what the Fed really gives us. I think they're done hiking rates, and I do think that they're going to loosen up on those rates sooner than they expect. So we're just going to have to wait and see on that one. Tomorrow, initial jobless claims will be something to watch. That could also cause some volatility for us, especially if that number comes in super low, because that's more ammunition for Jerome Powell to speak about when he comes out and talks. So really, we don't want to load him up with any more reason to do further rate hiking, because we see an even stronger consumer than they expect, and that there's no slowdown in the jobs market, and we don't want to show them numbers that inflation is coming back, or maybe it's just holding steady for us. We want as much information as we can, and as much evidence as we can get that inflation is on its way out, where the Fed can't craft a story that inflation is not done yet, that inflation is staying higher for longer. So the federal funds rate is going to have to remain higher for longer, and we're just going to have to get used to it. I mean, if that's the case, that's the case. I do believe that inflation is on its way out. I do believe when they say higher for longer that they might hold it up higher than where it's at right now. However, I don't think that they do any further rate hikes. So about those 16 free stocks, people are signing up. They're making their deposits. They're getting their free stocks, and it is awesome. Be part of this by using my link. That's down in the description. Here are the deposit levels. $100 or more gets you 5 free stocks, $50 cash reward at every tier. $1,000 or $5,000 gets you 15 free stocks. And of course, that $5,000 tier gets you the free share of Tesla or Google. This offer does go away on August the 31st. Take advantage of it while it lasts. You won't be sorry, I promise. Let's move over to Patreon, my exclusive content, my NVIDIA stock price prediction, and my NVIDIA earnings projection, which I've put out. We'll see how that goes as I'm recording this before they release their earnings. That's available over there. Tesla stock price prediction. I'm also going to add on SoFi in the near future. My CPI stuff is over there. Also, my watch list of stocks that I add to throughout the trading week. And don't forget about my private Discord. There's so much value over there waiting for you. I don't know what you're waiting for. We'd be absolutely stoked to have you over there. So come on over and join us. The Jackson Hole Symposium last year, I believe it was the 26th of August that Jerome Powell came out to speak, and that was this big bodied candle that we have right here that we're looking at, where we had the NASDAQ 100 drop 4%. And look how long it took to bottom out. We didn't bottom out until the middle of October. So that's something that could really rattle the markets. And that's why I think there's volatility coming up, because even though I showed in my previous video that we are not where we were last August as far as inflation goes, as far as supply chains go, we are just a world better than what we were. Let's look more recently as to what we have. We have a peak to the left, we have a peak forming to the right, and we have a 50-day that can be troublesome for us. I talked about that in my previous videos, and that is something that we really want to watch out for. I said that we could possibly peak out around 370, 372. Right now, if this holds steady as a peak, we did touch today. We touched 370.22, so we're right about where I thought that we would get to. Tomorrow concerns me. I don't know if we see that concern come in, the volatility come in on Thursday, or if we see it Friday morning. I think tomorrow, if tomorrow's another strong day in the markets, Friday's where we see that red come in, at least in the pre-market and the early market hours up until Jerome Powell speaks. And then we'll plan accordingly from there, and we'll see what we get. Optimistically, we break that 50-day and then we use it as support again, and then the market continues to rally. I do want to just show this run up that we have, and I will tell you the hedge funds and institutions will be looking for value. The trouble with upside from here is just, well, exactly how much higher we can go. And that's something I talked about with the sell-off that we got. And I think about the hedge funds and the institution, that they want good values. They want good quarters for returns. And I will tell you what, even though we have some broadening in the markets, that it's not just what we saw with big tech leading the way, that money did start to go out to the other stocks. I still think that they're going to find a way to push the markets down in the meantime. And it's going to be something for the retail traders that we're going to have to try and stay on top of, as far as the direction that's coming for us and exactly how to plan it out. And that's something I talk about throughout my videos on YouTube, and I also make Patreon exclusives. Like I said, that link is down in the description. So the head and shoulders is something to watch out for, especially if we do return back down here. Let me zoom in a little bit more. I would say down to about 357, maybe down to 354. If we return to those levels after peaking about where we're at right now, that could be a little bit worrisome for us for the Qs. And if we go over to the SPY, it's very much the same picture that we have. Peak to the left, big peak in the middle, and we're about symmetric on the right-hand side here. The neckline that we would have, should we return to it, and I don't know that we do, still comes in around 430, 432. I would most definitely watch those levels, and then we could possibly, if we do get there, we could sell off. Maybe we go down as low as 425 when we reach this previous peak back last August, or possibly, depending on how aggressively we sell off, down to about 415. I do think that we would stay up above the 200-day, and I think that we would continue our bullish trend, but with some volatility along the way. I don't think that we flip to bearish unless we really get significant signs of economic slowdown to the point of recession, and we're just going to have to watch. And some things that I'd be concerned about for that. Further credit tightening is not going to be great for us. Further rate hikes are not going to be great for us. So I believe that rate hiking is done. And when we look at the CME Fed Watch tool, I'm not going to bring it up because this video is starting to get sort of long, but I will say that when you bring up the CME Fed Watch tool and take a look at it, it is possible that we have 2 more 25 BP hikes coming for us. So that right now, where we sit at 5.25% to 5.5% for the federal funds rate, it is possible to get up to 5.75 to 6% for that federal funds rate. And that's about where you'd see that peak. We want to hear, are we going to be higher for longer? Are we going to have resurgent inflation? Are we going to have a re-acceleration? That's something that came up more recently for the Fed. I think Fed Bostic is the one who came out and talked about that one. So those are most definitely things that we want to watch out for. So let me wrap up the video this way. The markets closing near their 50-day could act as resistance for us, and that could actually spell a little bit of red in the markets tomorrow. Maybe we have an early peekaboo or something like that and then close down. I'm really iffy on tomorrow's market, and I'm not really supposing anything beyond what we get on Friday at 10:05 a.m. when Jerome Powell speaks. I do think that there's red waiting for us somewhere between now and then. We've had some good days in the markets. Now we have to get ready for that volatility that's coming for us, where it's just going to be a mixed bag until we find out what he says and where we end the week, and then we can replan from that point in time. Thank you guys for watching this video. I really do appreciate it. Talk to me down in the comments. Let me know what you think about the Jackson Hole Symposium coming up. What about inflation? What about the federal funds rate? What about the stock market itself? I'd absolutely love to hear from anything that you'd have to say from that and about that. Share those perspectives. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.